So you're telling us we have to keep this part in surplus, or there will be a default on the loan as a penalty?
You have to budget a surplus every year.
Or how long do we have to correct it?
If you don't have a surplus, you have no reserve, and you're
looking for
behind.
This is
But how long do you give us to correct it before you call it a default? I'm asking you a question. How long do you give us to re-up our surplus before you would come in and say there's a defaulted loan?
I can't. I will not talk for Rock USA, but I don't see why they would.
Well, how could you? How would you even know?
How would I even know? That's right.
Because you only have a year of experience.
That's right. I have experience. Now there's a group in.
So how would you know?
There's a group in Milford, Connecticut that we worked with it last year.
Who's we again?
Oh, sorry, CDI. All of them actually. And,
that's different.
And they actually did that.
That's a new one.
They budgeted a surplus, but they didn't. Their surplus was actually smaller when it got to the end of the year. Plowing was terrible on the coast, and so they still have a surplus, but it's under.
Is there
we don't
percentage of the surplus you need?
It's if your mortgage payment every year is say $30,000.
Yes, how much?
Then you have to budget a $3,000 surplus. It's 10% of your mortgage payments.
Okay.
Yes. Now, if you don't actually run a surplus, it's a budgetary item. If you have too much plowing, like a lot of people did last year. There's no penalty.
So if there's
right, can't we run it like the state? No matter how bad they can't do that, huh?
No, only the state and the federal government can like that.
So let me ask you,
unfortunately, the rest of us have to try and run break even.
So let me ask you a question. Let's say all the trees had to be taken, or the ones that had to be taken, it got up to a huge expense. Let's just say, for instance, that everybody up here in this park smelled sewer in the water. Let's just not say that. Let's say that's actually the case, because a lot of them are mentioning that. Now, let's say all the water has to be redone, all the sewer has to be redone. Let's say the roads have to be all paved. Now, are you saying that if they don't have a surplus after that they would default on the loan? And then what is the penalty for default? What is this penalty?
I said you needed to budget an annual surplus in your operations.
And you said the penalty was if we didn't?
The penalty is that there is no penalty. We'll put it this way. You're supposed to budget 10% of your mortgage payment surplus. If you refuse to do that, in theory, Rock USA can say, we want our loan funds back. And you would have to refinance.
What it amounts to is we could budget it so that it's there, but it may not be there at the end of the year because of some emergency.
So that was my question, was how long did we have to correct the surplus before you come in and say?
It's a budget. It's a budget surplus. We can't make.
I know it's a budget surplus.
In other words, you have to plan that budget with a 10%.
I just asked you a specific question. How long would they give us to correct our surplus before they would say it was a defaulted loan? Why can't you answer this?
Because I don't know.
Every month.
We'll get the information, please.
You put the 10% away every month.
Every month, okay? As long as your budget shows that you have a surplus.
Budget's only done once a year. So
yeah, but every month it shows.
Yeah.
Every month your income should show that 10% extra.
That's right.
Okay? Now, if the reality is that you actually end up having to spend more than that, well, you spend it. But as long as your budget shows that the 10% is there, you're fine.
That's it. You do one budget a year. We make sure you have that surplus. If you don't have the actual surplus at the end of the year,
you want to say, well, where'd it go?
Well, the one ask where it goes because we ask. If you have too much of a surplus, we ask why too. Because you're not supposed to have too much of a surplus either.
Why?
Because you're overcharging yourselves rent.
So the next time.
So what?
That's what you could say, and I'd say, you're right, so what? But I'd still ask why.
But then you can convert that to
But you can convert it to capital.
For the record.
Your money.
You're saving up for an in-ground pool.
You do that? I've never heard rumors of those things.
And we can put it on Winchester's property.
You probably have to.
This might be a swimming pool the next time you come up here.
Hopefully it smells a little better.
For the record, Andrew, for the record, the next time we see you, you can provide us with the information that tells us how long we have to correct any budget surplus problems so that we do not.
Right now, that if you produce a budget that does not have that surplus,
right.
Once a year, they have the right at that point to call the loan.
At any point, you mean?
At that.
You mean with no time to correct it?
Right.
So with no time, they might just come and say that it's default.
They have the right to do that. The same way if somebody...
They don't give you 30 days
So
or
what
90
it
days.
amounts
They
to?
won't.
So you're
I don't believe by height of hearts they will do that because...
If you make the budget.
So what are the monsters? It's not in their best interest. They're not here to own a park.
Well, you make that budget.
You make the budget, it shows it, they're fine. You overspend,
You're fine.
because you showed them your budget.
That's right.
Okay.
You have to have you basically just have
All you gotta do.
and it's kind of like if you refuse to have insurance,
Okay.
they can call you up, right? Same on your home, or your car, I guess too. You know, refuse to insure something. It's a covenant of loan, so we make.
Yeah, but your car doesn't ask you to have a surplus of $27.
No.
I budget $10 a week.
So it is different. You're using a bad analogy at this
You don't drink much.
point. Andrew, you're using a bad analogy. We're talking about real estate and you're talking about a car.
Last week I spent $11 for alcohol. I guess I'm gonna have to call my loan.
Maybe the 10% makes a lot of other things.
Even the worst, like I said, the worst snow year in South Connecticut, these places had twice the snow they usually do, and we had tens of thousands of dollars. They still had enough money. They still had a surplus. And we do that because things happen. Tax bills
You need that money there in case something happens.
right. Tax bills
That's
get
what's
set, and then the town will come in and say, no,
Right.
it's screwed up. Your tax bills.
You know, I see what you're saying that every month.
Suppose this park wants to put budget 20%.
You could budget 20, I might ask you why, but if you said, because we really want to, I'd go, okay, fine. Because surplus doesn't do anything but help the lender, right? It gives them, it makes sure. Yeah.
It keeps us from defaulting. I think it does a little more than what you just said.
It protects us, that's all.
Yeah.
Gives you money.
Well, it's good to know how important it is to run a surplus now, because that sounds pretty important.
It is, because,
Yeah.
you know, we run a budget to what we think things are gonna be, and then we have basically a slush fund. And then at the end of the year, you decide what to do with it. And it's up to you, not us.
And if the health inspector came in and said, well, you know, there's a landfill here and people need to actually relocate all these things, and you didn't have the funds for that, then we're talking about what? A defaulted loan because we don't have the surplus to pay for these things? Or are you asking us to take out, would you be asking us to take out another one?
Larger issue if that was to happen.
I'm sorry,
I
answer
think
that?
we'd be talking about a much larger.
I'm talking about the issue right now. If somebody came in right now today and they said, guess what, guys? There's going to be a big movement because there's a health issue on this land. What happens to these people? Are you going to say this defaulted on the loan because we can't have a surplus because we have to pay for these things? Or do you want us to come to you and ask for another loan?
The budget is an estimated thing of cost, okay? You create a budget and you down at the bottom of that budget, you put a surplus.
I get that.
Okay,
Yes.
so,
Okay.
that's all it is.
Yeah.
That's
It's
it.
just an estimate of what you're going to have.
You
What your
overspend.
actual expenses are during the course of the year don't make any difference as long as the budget showed that you attempted to have a surplus.
It's a paperwork issue. You know, you just gotta have it on paper to present to the finance people that, yes, you have budget, you've taken into account the surplus. As you spend it, it's okay. They see it in black and white that
You're collecting.
took it into account and you're
Thank you.
planning for it.
Thank you.
Oh, so we don't have to keep X amount of dollars
No,
in there
no,
all the time?
You just have to show that you
That's
planned
you.
You
for
have
it.
to plan you have to plan, basically you're planning an amount that's going to be there in case you need it.
Right.
If it isn't there at the end, whatever's there at the end of the year, you get to determine what you want to do with it.
Give it back to people.
Give it back, because it's your
Keep
money.
it.
But I mean, if something comes up and we have to like take down trees.
Yes.
You use it.
We use it.
Yes.
And then if we're down to like $100.
You're fine.
That's
You
right.
will not be in default.
Oh, right, okay.
Even if you know, what it is we make you budget correctly, but we can't.
It's like you
Exactly,
can't
tell
really
what's
put
gonna
it
happen.
on your paycheck.
Yeah.
We're trying to make
If
you
you don't know what's going to
responsible.
happen.
Andrew, that was when you said we make you, that was my question. That's why I was asking again.
They make you make the budget showing.
And that's why people say capital.
Thank you so
In
much.
case something happens, you have money to pay.
You have to have that, and that's one of the reasons why the cooperatives, rumor has it, all these hundreds have succeeded is because they have that money in case something happens. And if you run on a zero budget and you got a tree, then where's the money going to come from? You got a tree issue or something. Some of the older cooperatives that we deal with run on a zero budget, and then something comes up and they come looking for money to borrow. You know, I got one in Orange that's looking for money for trees because they don't have any.
Because they have a budget for their money.
They don't have any replacement reserve. The only reserve they have is stolen by their in-house manager, who was not bonded.
And Lou doesn't have any replacement reserves either.
What's that?
Lou doesn't have any replacement
Lou,
reserves either?
Lou, Replacement reserves, most landlords, I believe, don't think in terms of putting aside replacement reserves. Unless they're mandated by a bank or something. They just pay for things that come up. You know, and we'll put up he claims $150,000 for that out of his pocket. So, but because you guys don't have that deep a pocket, we haven't replaced it.
I don't know, we might be millionaires.
You could all be millionaires, and one of you could.
We might just be listening to you for the fun of
it. But because this is part of 37 households, the last thing you want to do is come to everybody and say, I need a grant.
Oh, you mean the 31 that were occupied?
No, I meant the 37 or 30, you know, how good, whatever your membership actually is, you don't want to have to go back to them and say, I need another $100, or I need another 200. Because that's what a lot of associations do, is they zero budget and then they hit people for special assessments. For condominiums often go, you know, I've heard. You get a roof that goes and everybody has to pay $200 to somebody else. It's easier to
budget already for it, I heard.
That's right. It really does work better, I've heard.
So Andy, I had some questions about your Google profile.
Sure.
When's the last time you updated your Google profile?
Look, personally,
I'm sorry,
I really don't want to talk about this.
Oh, okay, so I'm sorry. When you said on your Google profile in your professional summary that it included the following, loaning people their own money back to them, what did you mean by that?
That's what banks do.
Okay, thank you. And when you said short selling was your superpower, what did you mean by that?
I don't know if I have enough time in the evening.
So you don't want to answer that question?
No, I don't. Actually, I don't
Okay.
want to,
When you said that you
discuss anything else.
I'm sorry, this has to do with your character and this has to do with us dealing with CDI, so this is very relevant to the 5 C's of lending. One of those being character. Now, it's important when you said that you, on your website, Andrew Danforth, you said that you, as in your professional summary, invented the subprime market and then predicted its downfall. What did you mean by that?
I worked in subprime lending in the 90s.
You said you invented it. What did you mean by invented the subprime market?
The same way that, who was it that said he invented the internet? Al Gore invented the internet. Well, I invented subprime lending.
And last question, what did you mean by you will take 80 cents on the dollar?
Well, when you buy something for 20 cents and you sell it for 80 cents, that's a profit, right? Did you read my whole profile?
I'm reading it right now, yes, I'm reading more.
Earlier it says...
Well, that's why I'm asking you to clarify it, so I can know.
In business, you buy something at one price and you sell it for a higher price.
Mm-hmm.
That's why at times I bought things for 20 cents a dollar and sold them for 80.
Oh,
other times I bought them for 80 and sold them for 20.
Well, thank you for clarifying that.
Anytime. But I really don't like that. Honestly, I understand that you want to know who I am or how CDI is.
Yes, because the profile has to do with the person's character.
Right,
they put things on there
kind of a humorous
from the personnel. Yeah, well, what did...
Say that you invented subprime loans.
What's that?
Why would you say you invented subprime?
Because in a way I did. In a way I was involved in mortgage banking in the 80s. Before we called them subprime, we called them home equity lending. We didn't think what was going to happen. But eventually, I wasn't involved in it, and refused to be involved. I told everybody this is going to blow up. That's why it says I predicted its downfall. I left that side of mortgage banking 20 years ago, and I said this is pathetic, and I want to get out of it. There's one of the reasons why I'm.
So let's go back to short selling. What is short selling? Can you explain that to me?
Borrow stock and sell it, and then buy it back when it goes down.
Oh, is that just for stock?
Yes, you can do that. Well, you can do that for almost anything.
Oh, you can do it for almost anything.
Yeah, well, anything that's traded, yeah.
So what does it involve? Can you explain short selling to us
Yes,
again?
you sell shares of stock that you don't own, and then you hope it goes down and you buy it back.
And you hope it goes down. Why do you hope it goes down, Andy?
Because you want to make money on it.
Oh, okay. Thank you.
It's fully legal, but legal since the depression.
Well, that's why I was asking. Let me clarify. And why did you say on your profile that you like in your professional summary any activity that can be preceded by the words miss, mal, and non?
Because I have a sense of humor.
And what kind of words for mal did you come up with?
Ephesians.
Mm-hmm. Well, what about mislead, misquote, misunderstand, misguide, malevolent, as in evil in nature? Why do you like the words mal?
Because it's a joke, and I have a sense of humor.
Oh, really? So on your professional summary, you like to humor us?